Good morning. Welcome to this update from Phoenix Blue on Wednesday, the 10th of August. I'm Tom Colley and I'll talk you through the markets and the news this morning. Well, news overnight is that we've seen a significant weakening of the dollar. The dollar has made the size of move overnight that we'd normally expect in a 24-hour period. This has been reflected in almost all the markets that we trade. It has meant that we've been stopped out on a number of trades, the majority of which were already at break even. One of the reasons that potentially the move was so big overnight was a lack of liquidity. We were aware, and we've talked to you about that in the month of August, so we were trading at reduced risk, so our losses are minimal. However, from a trading perspective, a disappointing scenario overnight. Let's have a look at the news. Now, there's no particular one significant reason why we saw that dollar weakness. We did have a speech from the Bank of Australia Governor Stevens. He's about to leave that position as governor after a 10-year tenure. The speech was more general and wide-ranging than would normally be expected. It was almost a goodbye speech. Perhaps he wanted to leave some sort of mark so that he would be remembered. The substance of the speech was that the world economies and obviously the Australian economy needed to generate growth. The ability of central banks to create that growth through interest rate reductions and quantitative easing appears to have run out of steam. He was suggesting that governments needed to make structural reforms, which from a political perspective would be unpleasant. Structural reforms tend to mean longer term plans and changes that fall outside of the electoral cycle, so that the benefits aren't seen within the normal 4 to 5 year political tenure, and therefore would be very, very politically unpleasant, because for a government to actually do that, they could potentially be seen as making themselves unelectable at the next election. Okay, going forward to the news for today, we've got crude oil inventories at 330. We'll have our eyes on that. Crude's been strengthening through this week. We also have at 10 p.m. tonight, we have the Bank of New Zealand rate statement followed by the press conference. Now, the forecast is for a reduction from 2.25 to 2%. That's basically what we anticipate, the market anticipates, but we're very, very cautious in what the response to this might be. A couple of weeks ago, the Bank of Australia did exactly the same. They reduced their rate by 0.25%. The markets spiked down very briefly before turning into what's been an ongoing bullish move since then. Added into this picture is a lack of liquidity at this time of year, and the fact that it's a Japanese bank holiday in the Asian session when this announcement just precedes that session. So we're going to see a very, very volatile response. Even if nothing happens, I anticipate it's a market we will sit out of in the light of that, and in the light of the dollar weakness that we saw overnight. One other thing that's happened or come to light overnight is yesterday the Bank of England failed to hit their targets for buying bonds for the new element of their quantitative easing programme that was only announced last week in response to Brexit, when they also reduced the UK interest rates. The reason for this is bond yields for new bond yields currently are so low that the holders of bonds, and they were typically trying to buy 15-year bonds, saw a better return or more safety in holding on to those longer term bonds. Now, the Bank of England have said they will be making an announcement at 9 o'clock this morning in how they intend to respond to this. That suggests that they don't see it as a one-off, so I would expect them to be announcing some additional asset class that they will be purchasing, or some shorter term bonds, something of that nature, in order that situation doesn't recur. Okay, let's have a look at the charts, and this is the dollar move I've been mentioning. We saw a bearish move yesterday. And this is the move that we had around 6:30 this morning. That's the size of move you might normally expect. It's within a normal daily range, so overnight when we wouldn't normally see a great deal of activity, we've seen a move of that magnitude. That's been reflected in almost all other markets, as we'll go on to have a look at. Here's dollar yen. We saw a strengthening of the yen. Back down to this trend line here. How are we seeing a Bank of Japan intervention? I don't know, but I do think we'll see it if we get down to 100 or 99, where we saw it previously, immediately following Brexit. On the counter side to that, we'll see the Nikkei 225. Now just at a very interesting level. This is the 6,000 big round number. So we will be looking for a potential break, pull back and retest to take this market longer on continuing dollar weakness and yen strength. Okay, here we have the pound. Now we saw a bit of a bounce overnight on the pound on that US dollar weakness. We don't expect this to continue. We've a bias which is short this market. We've already mentioned the problems on the bond buying programme with the Bank of England. That can't be good for the ongoing picture here. So we will be looking for further downside moves in this market. Now we may be waiting for that to happen. There is that lack of liquidity that I've talked about. And a lot of uncertainty around at the moment, so any trading we will be doing for the remainder of this week will be low risk, looking to get stops to break even as quickly as possible. Over on the Aussie, I've mentioned this already in the light of the New Zealand rate announcement. We saw the Bank of Australia rate announcement here. This is the day of the announcement. We saw a spike down and a close at recent highs. We've subsequently seen continuous higher closes since then, which is completely the opposite of what the Bank of Australia would have intended and what we would have expected in a normal, in inverted commas, market. So this is something we want to be aware of, and is the reason, or one of the reasons, we're very cautious on the New Zealand dollar rate announcement overnight. We're bullish going into this announcement. We actually had a nice intraday trade with an entry at the top of this channel yesterday. We were looking to get into a trade with no risk going through the announcement because we were already concerned what the response would be. We wouldn't have gone into the announcement with any risk on the table, but in actual fact that attempt to get in there on an intraday entry and was stopped out by this move in the light of the dollar weakness. One market we are interested in, or one more equities markets other than the Nikkei. In fact, we're interested in all the equities markets, but this is offering possibly the best technical setup at the moment. We've got a level through here on the DAX. We've got a trend line stroke triangle. We're looking for a retest of that level to take this further to the long side. Gold, we saw in the light of the weakening US dollar, we've seen a bullish move on gold, which is what we would expect. We saw a spike in both in other metals, platinum, palladium, which we were short of. We saw some really overplayed spikes, much bigger than we saw on gold and silver as a direct response in relation to gold. We were stopped out in those two markets, but we already had profits off the table and stops at break even. Okay guys, now if you want to learn more about how we trade, how we look at the markets technically, fundamentally, and through the commitment of traders, we have an upcoming event on August the 24th in London in the afternoon. If you're interested in turning up, that will be a 4-hour free trading session with our two most senior traders. The opportunity to ask as many questions as you like, and the opportunity to meet some existing Phoenix Blue members. If you want to come along to that event, just pop onto the Phoenix Blue website, leave your details, and we'll send you an invite and confirm all the details to you there. Okay guys, so I think clear from what I've said, if you are trading today, trade very carefully, keep your risk reduced, look at getting stops to break even as quickly as possible on those intraday trades. Okay, have a great day, and we'll talk to you again tomorrow. Thank you.